Hello everyone, today is Friday, May 22nd, 2020. My name is Evan and welcome back to another market recap video. So in part one here, we're going to talk about what went on in the markets this week. We'll look at performance, market internals, market sectors, and volatility, and try and make some sense of really what happened and what stands out. And then in part two of this video, we're going to jump into the charts and we're going to look at current trends, price action, and kind of fit everything together into the overall landscape. So let's kick things off here. A couple of the top notes from this week. Really, first and foremost, there was no follow-through selling to last week. So if you recall, last week was a bit of a tough week for the market. There was a little uptick in volatility. We saw some reactionary outside weeks to the downside, but none of that saw any follow through. In fact, it was shrugged off early this week. So we'll talk about that a little bit later. Russell 2000 leading this week by a long shot. So that's something new. And Memorial Day is Monday. So we have a long holiday weekend. So markets are closed on Monday. They'll resume trading on Tuesday. And of course, hopefully we take a moment to thank everyone who served in the armed forces. Important day Monday. So let's keep that in mind. Now, if we jump into the action here, equity markets broadly here were very strongly positive. From the S&P 500, we're looking at the right column here. You can see the S&P 500 was up over 3%. NASDAQ shy just of 3%. And look at this performance in the Russell, 7.5%. I think it was down about 5.5% last week. So, we basically, kind of slingshotted back to the upside and made some forward progress. And world markets up almost 3% as well, but certainly a little bit tougher abroad in some of the other international markets. Now, market internals, if we look here, this was encouraging this week. We saw one of the best weeks of new highs for the NYSE right across the board. There's 117 new cumulative highs made this week. So that's a pretty strong number there, or at least a good number from our recovery lows that we've been in for the past 2 months. And if we look at the AD line, of course, we do see almost 4,000 net cumulative advancing stocks this week as well. So market internals, very kind of favorable and supportive of this week's rally. We can see the percentage of stocks above their 20 SMA, about 60%. So that tells us we're not at the nosebleed. Everything has been bid up territory. So there's some room to move forward heading into next week if the market so chooses. Now, in terms of sector performance, we had an interesting mix at the top here because remember, we sort this list by the 1 week performance. It's the right-hand column here. And at the top of the list this week, it was industrials, energy, and real estate. Three of kind of the worst hit, again, underperformers or biggest laggards in this, in this year, frankly, really recovering and springboarding to the upside this week. So that was really what was working. And on the downside, some of the things that have been actually really strong. So basically, healthcare, which has been really strong at the bottom of the list this week. In fact, the only sector negative. Consumer staples at the bottom of the list, utilities at the bottom, and then technology is number 4. Now, of course, tech was still up 3%, but still you can see just a little bit of a flip there into, I don't know how you want to frame it. Certainly the more kind of risky sectors, maybe lower quality sectors, but certainly I think we could agree to the most beaten up sectors were some of the biggest performers this week. Now, in terms of volatility, it was, again, in a constructive week. So we're looking at this blue line compared to the orange line. The orange line here is last week. The blue line is this week's volatility term structure. And basically, the cliff notes here are that we want to see volatility lower, right? We want to see volatility across the curve come down. And you can see with the blue line, it did that. And we can also see VIX is back below 30 in the front month, so that key sort of psychological level, we're back below 30. That's constructive, and we no longer have, even though last week we didn't really have any strong backwardation in place, we don't really have that either. You can see the front month is lower than the 3-month VIX. That is at least constructive, although all things considered, a 28 VIX is still a high historically elevated VIX. So there's still, reason to be concerned out there for sure, or at least suggests that, this market environment is not, kind of Goldilocks, all things, all worries are behind us type of mode yet. Now, in terms of credit markets, another positive note here, you can see investment grade credit, high yield, junk bonds, both speculative and investment grade credit firmly in the green. Maybe we can thank, the Fed for that, but we've seen, plenty of liquidity here and good strength across credit, at least indicated by these two ETFs. Finally here, if we look at interest rates and commodities for the week, so we saw yields basically rise across the board. Gold dipped a little bit. Silver had a nice week, and commodity and oil, specifically WTI, there up 14%. So a nice continued bounce and move higher there for oil. So that's the rundown for the week. If we sum it all up, we look at the report card. It was a very constructive week. I rate this week an A- for overall performance and health. That's a strong snapback from last week's grade. The one downside is still just the volatility environment. A VIX, close to 30, you still have to be cautious there, and there are still plenty of risks out there, despite the good performance from this week. So that's how things shook out for this week. Let's now jump into part 2 here. Let's look at some trends. Let's fit this performance into the past few months and see kind of where we are. So we'll be back in a moment. All right, we're back here with part 2. We've got our TC2000 platform open. This is our equity screen here with our trend filters applied. So you're looking at a weekly time frame. Let's start at the top left. This is the S&P 500 cash market. Again, weekly time frame. You can see we have continued this rally higher. Notice we are still in this transition mode here. So despite this week's rally, we're still not getting that confirmation into green yet, based on this particular trend indicator. You can eyeball and see how it reacted in the future at different points, but essentially we're still waiting for kind of the green light here for the S&P 500. Good progress, and if we see that continued strength next week, if we see more upside, I wouldn't be surprised to see this start to transition back up into a bullish state. Now, if we look at the top right, NASDAQ 100, again, nothing changed here. Price continues to move higher. You can see we're almost back to the all-time highs that we made back on the middle of February. So we're getting up. Let's not show that again. We're getting back up to those prior all-time highs. The trend strength here is green. It's been that way. It's been bullish. All of the strength really in this market has been kind of huddled into the NASDAQ. Bottom left here is the Russell 2000. Again, 7.5% move. You can see it's over our trend filter here, but still not transitioning yet. So we're going to need a little more time, a little more convincing before we get the green light here. It's something we should be paying attention to into next week. But right now you can see, again, kind of rallying into that trend line. And on the downside here, bottom right, that is ACWX. So this is international markets. You can see still firmly red, hasn't even touched that trend filter there, hasn't even moved into the transition state. So you can see the world is absolutely still kind of underperforming what the US is doing. It's harder out there kind of internationally than it is in these here United States. So that is the overall look. If we go to the daily time frame on all of these charts, you can see we are in a bullish kind of filter here, bullish trend across all of these four markets. If we look at the top left S&P 500, notice how gradual price is. So price is the white dotted line on this chart. So we have really, kind of moved sideways here, but we're still holding above this our trend here. So that's at least still positive, and we'll see if we can continue to hold that. Everything else here, nothing else has changed. You can see the Russell 2000 now has more distance in between it and its daily trend than the S&P 500 does. So let's jump into some of these markets now. Let's take a look at some of the individual price action here, and a couple of things I want to point out. First here, if we go to the S&P 500, This is basically the view here that we've been most closely watching price. And basically, you know, in the past few videos, what we've observed here is that the S&P 500 has you know, pretty much went nowhere for a little over a month's trading time. It had been essentially oscillating sideways between about 2,800 to 2,950 or so on the upside. So, you know, call it about a 4.5–5% range or so. And we've attempted at this 2,940 multiple times. That's where we peaked out back here in late April. We retested it in mid-May. And now here we are, thanks to Monday's big gap up. And that was really the news from today, or the story of the price action this week, is that all of the progress from this week came on Monday. We had just big gap ups across the market, and then we essentially spent the rest of the week chopping sideways and kind of digesting those gains. So when we look here at the S&P 500, we're closing right at / above this 2,940 level. This is an important spot here for the market. It's a spot where the bulls really want to, you know, get going to the upside. We don't want to see any faltering right here. We don't want to see rejection of these highs to keep this market healthy, pent up, and to continue kind of a second wave of momentum, if you will. We're going to want to see the S&P 500 start to move above this 2,950 zone and start getting above and leaving this old resistance behind us. That's going to be what we should be paying attention to heading into next week. So you can see we're right at this zone here, little too close to call. I think some people would be looking at this as a breakout already. I'm a little skeptical still, or at least just hesitant on calling this a you know, a pure victory here for the bulls. Partly because if I look at things like, you know, the Russell 2000, again, you can see it did close the week near its highs, and it is starting to move above this 133.50 area. The gap up from Monday was great. So lots of things to be constructive about, but it's still kind of holding in this general zone here. It's still holding, it still hasn't broken back above this 429 pivot. So we do want to be a little cautious here, because I do think this is a spot where in the short term anyway, this is where a lot of games can be played and a lot of rugs can get pulled. And I think if you're chasing here, then, you know, you just have to know the risks of potentially getting caught on any type of move lower. We look at the Dow Jones here. So in our trade ideas video on Monday, I'm sorry, on let's see, Wednesday, we did talk about this as a, you know, albeit an aggressive short, but being here at the top end of the range in the Dow Jones, for instance, notice it hasn't really tried to break out. It's really sideways here, right? So it's gone absolutely nowhere. It's sitting kind of in this sideways trend at resistance. So again, if you are you know, kind of thinking a little more skeptical, or you don't think this market's ready to break out just yet, this is where it has been, you know, very beneficial to be a seller at the top end of the range and be buyer closer to the 230s. So we'll see if this time is different. We have lots of very tight price action here. So basically between Monday and Friday, again, we went basically nowhere, and we've just spent a lot of time overlapping. So I think that does fuel us up for a move. If you're very short term, if you want to be a little skeptical here, then I think you can look at the Dow as potentially, you know, a short opportunity here. Again, if it starts closing and above and starts breaking out more convincingly, I would not want to be short this market. So it's a very aggressive short term trade idea there, or potential idea. I'm certainly not going to be acting on it myself. I don't have a tremendous amount of conviction on it, but the trader, little spider sense in me says it's just going to be a little careful up here as we dance around, and just seems like it could be a nice rug pull kind of gap fill moment, not calling for any big, you know, meltdown or, you know, 30% drop or anything to that magnitude, but maybe a little bit of a shakeout. I think, quite honestly, probably be a little bit healthy in the broad schemes of things. So if we go back to the S&P 500, I think we covered just about everything there. 5 days nice and tight again from this week. Sets us up for a little volatility expansion probably come Tuesday. One other note here that I'll bring up as we look at price action is we take a look at VIX. Again, speaking more to the short term, we see the VIX back below 30. That's great to see. Notice though, even though we got 3 to 7% moves up in equities this week, the VIX still did not break below last week's lows. So it still seems pretty comfortable up here in the upper 20s. That certainly could change, right? We could start to roll over more and melt lower. But for now, the VIX is still kind of very comfortable up here in the upper 20s. So the fact that this didn't totally, kind of roll over along with all of this nice bullish action here this week gives you, again, a little bit of a hesitation there. There's always going to be some mixed signals, and in these videos we'd like to try and just present both sides, lay out kind of the facts on both sides of the trade, and hopefully you can interpret that to make the best decisions possible for your strategy and your time frame. So that, I think, covers all of the equity there. Let's look at some of our other screens here. So if we go to the weekly chart of our credit screens here, we can see investment grade credit, nice bullish bounce over here, top left. You can see trend filter moving back into bullish territory. Junk bonds still in a kind of a world of hurt. They did put in a very constructive week, but now this is where context matters and putting it into the framework of where it has come from over the past 3 months. And you can see we still have a very firmly negative bearish trend there in J&K high yield bonds. Bottom left is volatility. Again, you can see price is below our trend filter here, but notice it's still in transition. So this is, again, some of the ways we've kind of intelligently programmed our trend filters is to basically kind of sniff out when there's still enough indecision there to not completely roll this over yet. There's still a fight going on right now, sort of what we illustrated there with the VIX holding that last week's lows. So we'll see how this progresses. I would anticipate, if VIX turns red here, I would imagine that would coincide with an S&P 500 that starts to move positive here on its weekly trend filter as well. We'll see if that happens. They don't have to happen, but that's just sort of an expectation there. What else is on the screen? TLT, still very bullish trend here. Again, you can see nothing but upside there for the past many weeks. Now, if we go to commodities next, you can see gold did lose some ground this week, but still very positive here in its weekly trend. Silver had an impressive week. Notice this is coming from pretty damaged territory. So even though silver has enjoyed a 40% rally off of the lows, which is monstrous for this commodity. The fact that it still suffered, approximately a 35% drop in the beginning of the year only gets it back to sort of, neutral trend right now. So we're waiting to see how that plays out, but silver kind of transitioning. Same oil down here, still very far from its weekly trend. Same thing with commodities. Now, if we get into sectors, a couple of things I wanted to point out here, and I think this is constructive. This is, again, some encouraging signs from the longer term perspective of things. If we look here at this very busy chart, this is sort of like a breadth indicator of itself, right? When we have all of our sector views kind of parsed out. And some of the encouraging notes this week is that if you notice here by vote of, green dots effectively on each of our weekly trend filters here broken out on the sectors, you'll see that consumer communication services turned green this week. We see consumer discretionary turned green this week, and that joins technology, biotech, and healthcare. So essentially, and these are a little overlapped, so these aren't super discrete sectors here because IBB is more of a subset of XLV, but the point aside here is we now have 5 weekly bullish trends here on a sector basis, and we have 4 that are in red territory, right? We have 4 that are bearish trends still. So we have financials, we have industrials, we have utilities, and we have real estate up here. Those are all bearish. So we actually have more sectors in uptrends than we do downtrends. And then we have 3 that are sort of neutral sideways. So again, from a weekly perspective, again, this is our longer term view, that is that is encouraging. That is good to see. So we'll see if that can continue, but more kind of joining the bullish side. So a couple of other markets here as we wind down, things I want to talk about just in specific price action. VIX we already talked about. That was one I wanted to mention. So holding last week's lows, we'll see how that acts heading into next week. I wanted to touch on gold. Gold here continues to really hold up, and I'm still do like the positioning here of gold. We talked about this consolidation it put in. It tried to get going, it pulled back a little bit, but still, all the trends here are still pointing upwards. So we'll give it the benefit of the doubt. Doesn't mean it has to break out, but still like gold here in terms of its general positioning. We talked about silver a little bit. One of the things I wanted to mention was all the volume that came into silver here on this latest week. So heavy volume coming in. So that is good. It does seem like it's at a longer term inflection point, or it's trying to, really repair just and unwind all of the selling here that happened early in the year. Again, it's still a ton of supply to the left of us. So weekly chart, longer term, we just want to see this continue and continue to hold these levels. But for now, I think this is good developments in the short term. Wouldn't necessarily want to chase it myself, but at least encouraging to see. And last but not least, I want to touch on healthcare. So this was the weakest sector this week. It was the only sector that was red. I still really like healthcare from just a general performance perspective here. Some of the more beaten up, higher beta areas are starting to, or certainly this past week, shine to the upside. But I wouldn't, kind of rule this out here. In fact, anything down into the mid 90s or so seems pretty attractive. We'll see if we get that, but nice kind of base developing here in a very strong area of the market. So we'll have to see if if that can continue heading into next week. So that's it. I think that covers everything I wanted to talk about. So lots going on there. Enjoy the long weekend. Thanks so much, as always, for tuning in and watching these videos. We do our long form market recap videos just like this every Friday. So you can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great weekend. We'll see you back here on Tuesday for the midweek video. And we'll probably be skipping that midweek video unless something interesting happens. Going through the entire market in this video, I don't necessarily think there's going to be a whole lot of difference in one day on Tuesday. But if we have a crazy session, then I will certainly do a video. So that's it. Thanks so much. Enjoy the weekend, and we'll see you next week.